Edward Morse, head of global commodities of Citigroup. His research is thick. It is legendary for its attention to detail that on the ebb and flow of oil economics. Wonderful to have you here.
Good to be here.
When did you realize we'd really finally made it happen, get it done, where we were finally developing an independence?
Well, I really realized it about a year ago, and people
but
thought
that
I was nuts still. Yeah.
Why was this so sudden coming versus the woe is me, doom and gloom you remember and I remember when we got our first gray hair?
Well, these turning points happened suddenly, unexpectedly, but it was high prices that drove three revolutions in finding and developing hydrocarbons, offshore and deep water, the oil sands of Canada and Venezuela, and of course the tight shale formations in the U.S. And this is going to spread well beyond North America by the time we get to the 2020s.
Do you predict sustained prices to keep this technological innovation moving forward?
Actually, the costs are going down. It's a controversial point that but I believe costs are going down. And while we are now seeing oil trading in like a 90 to 120 range, our view is that the $90 floor of today will be the ceiling of tomorrow. So things will get better as we get to the next decade.
Do we have the infrastructure in place in this country to accommodate this boom? Certainly pipelines have to be adding capacity.
Oh, well, pipelines, this is a big year for infrastructure growth. Believe it or not, while U.S. Production went up over 1 million barrels a day last year, we're going to have 1,100,000 barrels a day of pipeline infrastructure, and we're using rail. We're now, between ourselves and the Canadians, moving close to 2 million barrels a day. That's a huge number by rail, the old-fashioned 19th century way.
In our 7 o'clock hour, folks, we'll have an extended discussion linking in what Mr. Morse is talking about on trains as well. So Warren Buffett's right. It is about infrastructure, and you got to buy ugly metal steel because that's what's going to make this happen.
And we're moving oil from North Dakota by rail to the East Coast and the West Coast, Southern and Northern California. It's a remarkable change.
Tony Dwyer, turn this over to equities and link it into Mr. Morse's economics.
Well, I think it's a very important point because typically you'd worry about inflation and it hitting interest rate and hitting equities because it would suggest that there's too much demand for the supply of oil or hydrocarbons. And what he's saying is that it's not going to be a demand-driven price move. It's a supply-driven price move, which is ultimately very good for consumers and it's very good for equity market.
Do you overweight energies here?
I'm neutral weight energy. It's definitely leaning better.
Ed Morse, I want to ask you about the political implications of this oil boom. Certainly, we're not as dependent on the Middle East when it comes to OPEC and producing oil, but we can't leave it behind.
No, we can't leave it behind. I mean, there's a disruption in the world. Prices are impacted everywhere. On the other hand, when you don't worry so much about oil dependence, when you don't, and this is the other part of the story, worry so much about the fragility of the dollar because the current account balance is bound to improve. The two basic weaknesses of the U.S. maintaining its status as a superpower are gone, and no other country in the world is as well situated as the U.S. is.
We learned about the linkages of, say, Libya to its colonial power, Italy, this proximity. We have that with Venezuela. We have a very sick leader, controversial leader in Venezuela. Give us your update on what that will mean for Americans.
Well, it depends on how fast this happens in terms of a transition, but Venezuela is now producing no more oil than it produced in 1990. By the time we got to Chavez's election, it had gone up more than 50%. Venezuela should be producing 7, not 2 million barrels a day. A change in leadership is going to attract capital. It's going to attract infrastructure investment in refining, and Venezuela is bound to have a turnaround. The question is when.
What kind of government will they have? That's not your area, but you've got to be looking at this. Is it the same stridency of Mr. Chavez, or does it truly become more democratic?
Well, it is democratic. You know, nobody doubts
that's
that he
true.
won the election.
Fair. Yes.
And it's a country with very widespread disparities in income, but. The change is they have to happen because the country has been building up debt, can't service the debt, and they need a turnaround. The only turnaround they can have is oil. So I think no matter who succeeds Mr. Chavez, they're going to be a little bit more open about investment flows.
Never enough time. Edward Morse, thank you so much. Greatly appreciate it with Citigroup.